price of Bitcoin is currently tumbling down from new all-time highs. We saw this coming. We've been watching it all day. Here is exactly how and what we're going to do about it going forward. So take a look at this. Bitcoin currently down nearly 3% from new all-time highs put in just earlier today. Now, we were discussing, again, earlier today, the fact that I wanted to be short for this move. And the reason for that was there was a great deal of leverage in the market, leverage longs in the market, which were looking pretty susceptible to being wiped out to me if we had a repeat of this pattern, which is exactly what happened, right? And by a repeat of this pattern, I mean a repeat of the pattern we saw the last time we broke all-time highs yesterday. And that was a peak above all-time highs, slight pullback from there, and then essentially getting into continued downside action. Eventually, in this case, eventually coming to liquidate some of the leverage long positions in the market. And you can see that is what has just happened now. The market bounced a little bit towards the later part of the day, and then we pulled back again and just started eliminating some of those longs. Price just melting away. Presumably, in fact, even more leverage got back in, as retail or leverage traders tend to flip every time the market moves. Increasingly lately, you can kind of feel the market getting more and more frustrated and more reactive to tiny changes in direction. I suspect a lot more leverage entered the market here after they saw us starting to bounce. And the reason I suspect that is because I saw it on the other side earlier in the day, right? As soon as we didn't break and smash through that all-time high and go straight to the moon, we saw leverage coming in and building up on the short side. And if we take a look at the liquidation data here from CoinGlass, you can see over the last 4 hours, over $100 million worth of long positions liquidated. And crucially, as I've said before, that is nearly 2x the number of short positions liquidated. So obviously it's happening on both sides of the market. And you can see if we go out to the 12-hour there, the numbers are more balanced, but again, still very much biased to the long side. That is long positions becoming liquidated, i.e. forced to sell. So two scenarios: either someone in a long position is about to get stopped out and they close their trade, or they do get stopped out, or worst case scenario, the entire account becomes liquidated where they are physically forced to sell. And being forced to sell means they are dumping supply on the market. So that's what's happening, right? The market is absolutely vomiting right now. The next point of interest to me is this level down here at the lows around 122,000. First of all, we know that many traders like to place stop losses around support levels, okay? And this, if you take an uptrend that we've been in over the last few days, right? Low here, higher low, higher high, higher low here, higher high. This would be an obvious place for traders to be placing stops. This has confluence with another key level, which is visible on the CoinGlass Binance BTC USDT liquidation map. And you can see now from the shape of this, first of all, there's a load of shorts in the market, right? Remember what I said earlier about the fact that traders like to, or traders on leverage, particularly retail traders, like to just jump in on whatever's happening with the trend, okay? A load of people have flipped and gone short now. And we discussed this earlier in the day as well, but this bias is growing. So there's just a lot more leverage in the market on the short side right now, okay? All short positions are leverage. That's how short positions work. But again, if we zoom in here, we can see just a bit of difference in the gradient of these two lines, right? Essentially, we're steeper on the long side of the market. And that means that price is just immediately to the downside. There is more long leverage than there is short leverage at prices just immediately to the upside. And this kind of pieces out around that 122 level down to about 1217 and beyond that. And if we look at where that lies on the chart, you can see we are pretty much in line with these lows. So I think quite realistically, if price continues coming down, I've been watching this on the short-term time frames over the last half an hour or so, and you can see we didn't really bounce or wick up from this initial impulse down. It's not to say we can't do that right now, okay? It's more than possible. I mean, we've certainly seen action like that in the past, but this is still looking pretty heavy to me. And I think the closer and closer we get to these lows, at least as the situation is right now, the likelihood becomes that we actually break down from those lows and knock out kind of the last remaining residual long liquidation in the market. And that would lead me to think we're going to push down quite a lot further from that. That is really the type of scenario where these moves can overextend the downside. Again, as supply shocks the market, supply of Bitcoin is shocking the market while these traders are forced to sell. The next low of the trend that we just described comes in at about 121,500. Now, depending on how we break these lows, I might well look to get long for a quick scalp somewhere between these lows and these lows. So that is somewhere between a price of 122.3 and a price of 121.6. Best case scenario for looking to get long at favorable prices, looking for a big crash down and the eventual bounce up from there, or hopefully the bounce up from there, right, is going to be this level down here at about 120k. Now, the reason for that is essentially a move down that low. If it happens quickly, right, that's a very important caveat to this thesis. We've got to move down there with momentum. We've got to move down there really quickly and totally shock out all of that leverage that's in the market. Let's take a look. So 1215, if we kind of tally that up with our liquidation map, 1215 comes in at approximately nearly $200 million worth of long positions liquidated. And again, right, that's just where the gradient of the average, right, of accumulated long liquidation risk comes out, and this starts to flatten out. Also, as you can see, confluence with this level on the fixed range volume profile. So I've drawn that from basically the bottom of this move up, starting on the 28th of September, and that is a high volume node. So that essentially means that on average between the 28th of September and the top of the move, or the new all-time high, the most amount of average volume has been transacted around this area. That is called the high volume node. Now, that's not always the place where the market is likely to bounce, okay? But it gives you a reference point, and this does play out fairly regularly. Of course, this changes depending on where you draw your volume profile from, but for me that's confluence, and that would be a sensible place to get long. There's a term in trading called trying to catch a falling knife. Incredibly hard to do. Obviously, if you catch a falling knife, you cut your hand. And that's the way we mitigate that. Essentially in trading, that means we're not just going to try and pick the exact spot on the chart where I think the price could fall to. I'm going to be spreading out orders. But the first thing that I want to see before I start doing that is exactly how we break these lows, the wick being at 122.361. So I'm going to be watching this right now. I think if we break those in a less than aggressive fashion, I'll be looking to get long somewhere around an average price of 122. If we come through that very heavy, if we break through those lows rapidly, I will then be looking at the interaction with price around, or how price moves around the 121,500 level. And of course, keeping an eye on how the liquidation risk changes while that's happening. So right now, much more people are short than they are long. You can see there's all the way up to $835 million worth of cumulative short liquidation leverage, cumulative short liquidation risk up at 130k, right? Obviously above the current all-time highs. So if we were to shoot up right now, the expectation would be that these shorts just get absolutely melted, and then they're forced to buy onto the market, and that move gets extended. But right now, I think there are still some leverage longs to get knocked out of the market. We haven't yet got data through from today. You can see, as we've discussed already, the 6th of October was a $1.2 billion net inflow day for the ETFs. So institutional money is still very much interested. We are still in a bull market, but right now, I think it's most likely we break through these lows at 122,500. So I hope you enjoyed that quick real-time update. I hope you get to see this soon enough for it to be helpful, but of course, none of this should be considered financial advice in any way at all. This is just my opinion shared with you for entertainment purposes only. Thank you so much for watching. Plenty more to come.